The Fed spoke. Jerome Powell spoke. What he said, what the summary of economic projections said, why 5.1% is an important number, words he used like persistent moves, ongoing hikes appropriate. What this all means for mortgage rates in the future, that's what I'm going to get into in this video. Stay tuned. All right, Matt Gouget, Matt, the mortgage guy, residential mortgage broker, licensed all across the country. If you want to connect me and my team, go to greatmortgagebroker.com, fill out the form. You will get the red carpet mortgage service. You'll get the service on the surface at mortgage with Matt, the mortgage guy, greatmortgagebroker.com. I don't know. I'm just winging this, one take, no edits. Let's talk about what Jerome Powell said today. And this video will get released tomorrow. So we expected the most volatile week in mortgage rates possible. And what we really got is pretty calm markets, right? That's what you can take from all of this. If you want to skip to the punchline, is that rates haven't moved that much. There wasn't a bunch of market moving stuff being discussed today. A whole bunch of nothing burger, in my opinion, if you want to have my straightforward opinion. So to recap, December 13th on Tuesday, the CPI report comes out. Inflation is lower than expectations. It's continuing to come down. The month-on-month reading came in lower than we thought. The year-over-year reading came in lower than we thought. And so this had the potential, in my opinion, to be a market rally where mortgage interest rates came down. When mortgage rates didn't move a lot on Tuesday, I said, you know what? I get it. They're waiting for the Fed to talk on Wednesday. The Fed's going to do their 50 basis point hike, which everyone expected. That is what happened. But that was already baked in. What was more important was the dots and the thoughts. And the dots meaning the dot plot from the Fed committee members, right? The plotting of what they're going to do in the future, what they expect to see and where that terminal Fed funds rate is going to land. And then also the thoughts, what Jerome Powell said, how he reacted to Tuesday's inflation number. He played it pretty cool, right? He was like, another good inflation number, it's what we expect. And our aggressive 425 basis point in hikes in 2022, it's yet to play out, but it's working, right? Like that was what I got from him as he spoke and then he answered questions, right? So all in all, if you look at mortgage rates today, they're better by 17 basis points. If you look at the 10-year treasury, it's exactly where it started the day at 3.49. So not a lot of market movement. What we should dig into and what we should try to kind of look into, I'll put it up here on the screen and then I'll have a link to this down below, this summary of economic projections. A lot of people refer to this as SEP. So if you hear fancy people talking SEP this, refer to the SEP, summary of economic projections is what that stands for. So I'll pull it up here. I'll share my screen and we'll look through the important parts of this. Fed funds rate started at 0 to a quarter, right? That was the range. Basically, the Fed funds rate was 0. And over the course of this year, the Fed has raised the Fed funds rate over a series of interest rate hikes by 425 basis points. And so now that range sits 4.25 to 4.5. When they talk about terminal rate, that's how high they're going to go, right? With this Fed funds rate. And I talked about it on a podcast and I was lower than my buddy Mike Zuber. He forecasted like 4.85. They went even higher at 5.1. So I'll show you here. 2023, 5.1. This is projected policy path. of what they're going to get it up to, right? Then they're going to turn around and lower it in 24 and 25, which is to be expected, right? This is their, short-term fix for some pretty gnarly inflation, and what they're going to do, right? Another thing on this SEP, summary of economic projections, that's important to look at is this dot plot, right? And this is the different members' assessment of appropriate monetary policy. How much farther do we need to go with this Fed funds rate? And you can see right here, this one I'm circling, 19 Fed members, 17 of them, and Jerome Powell actually mentioned this on the Q&A. He said 17 of 19 members projected over 5%. They think we got to continue to raise. Even though like inflation is coming down, right? And that was kind of the tone, is like, yeah, what we're doing is working. Yes, a lot of this is lag, so you're not seeing all the effects of it yet. It's still yet to come, but we need to continue, not at the pace. And he talked about the pace. Part of the Q&A was like, do you got to do 50 basis points in February? Do you think it's going to be in 25 basis point increments for future rate hikes? And he said, listen, in 2022, it was all about the speed and doing a lot fast, big moves. In the future, it's less about speed and more about how high we go and how long we keep it there, right? Was his basic talk track. So 17 of 19 think we got to go above 5%, which means more rate increases. February, March, May, and June. Next 4 meetings, if we're 4.25 to 4.5 and they're projecting 5.1 as the terminal rate, that means we need about 75 more basis points. Will that be 325s and a 0 in those next 4 meetings? Will it be a 50 and a 25? Based on what he's saying, it's more likely to be 325s. So some things to pull out. He talked about persistent moves being more important than the how big they are. He talked about ongoing rate hikes appropriate. All these things that push towards we got to continue to be aggressive, bad for mortgage interest rates. But he left the door open, and I think that's where some folks that didn't see it as super hawkish would say, there's a chance for a Fed pivot next year still, right? And so I won't get into this whole report. This is the 17-pager. I'll link down below if you want to look at some of these GDP projections and all the other stuff that's in here. But interesting stuff today from the Fed. I guess the takeaway for me is that based on the talk track, their job is not done. They're going to continue to hike interest rates. It will be interesting to see what happens with mortgage interest rates. Essentially unchanged this week, essentially the same. And I think we're entering into a season where there's not a lot of stuff that I see as market moving. Before these first couple meetings, February and March of 2023, where the Fed's got to make the decision of, do we do 25 basis points? Do we do 0? I don't think it's likely they do any 50s next year. We're going to see more CPI data. And depending on who you talk to, while 2 downward trending inflation months, the December 13th and November 10th readings for what was October and November CPI numbers is a good sign, but it's not enough. It's not enough for the Fed to go, okay, our work here is done. Let's press pause. They're going to continue to hike the Fed funds rate, which, would suggest to me we don't go as low as fast on mortgage interest rates as some of my colleagues and myself included probably hoped or wanted, right? Over the next 30 to 60 days, I think we remain pretty flat. Between now and the end of the year, there's not a lot that's going to be market moving. The economy stuff, Q4 earnings comes out. that might have a mild effect, but nothing truly market moving. And so it's really going to be what happens with future CPI reads and other stuff that would move markets and mortgage-backed securities. So nothing too exciting. I was expecting for a volatile, crazy week. I was happy that we got clients locked in at the beginning of the week in case things got nasty. They didn't get nasty. They also didn't get better to where people that are in process getting a mortgage, like, oh my gosh, hook me up with them new low interest rates. They write about the same, unchanged. So I'll continue to watch it. I'll continue to answer any questions you guys have. Thanks for watching. Hopefully this was helpful. Again, if you want to connect with me and my team, greatmortgagebroker.com. Continue to watch it. I'm going to have videos coming out, not only on mortgage products and different things coming out for first-time home buyers, but continuing to follow rates and all things. So watch the next video, please.